Hi, I'm Lisa Leiter. In Chicago Business Today, higher risk education. The state agency that runs the College Illinois prepaid tuition program is putting all new investments on hold. That as it confronts mounting questions over its unconventional strategies for the fund that backs the college savings of 55,000 students. The questions come after a Crain's report detailed the Illinois Student Assistance Commission's move to invest nearly half the plan's assets in private equity, hedge funds, and other alternatives to stocks and bonds. And now state lawmakers are calling for an investigation of their own. Joining me to talk more about this is Brian Battle, Director at Performance Trust Capital Partners. Brian, thanks for joining us. So this order puts a stop to a $50 million investment in an untested hedge fund that the board had already approved. What does it say that the board is, putting this and all other new investments for the plan on hold?
Anytime you make an alternative investment strategy, you have to fully vet the manager and understand what their track record is, know who they are, know what they're investing in. So I think the state is saying, wait, let's make sure you've done your due diligence. There's nothing wrong with picking small managers or someone with little track record, just as long as you know what you're getting into. So the strategy is probably legit. Whether they're executing on it is the question. Given the history of the ISAC, given their rate of return that they're assuming, I think it's a good thing to stop them at this point because it looks like management might be losing control of this process.
Well, let's talk about management. What does it say, too, about the confidence that the board has in Andrew Davis?
It's very true that some of the things that ISAC is doing is in question. I mean, assuming an 8 3/4 rate of return is extraordinary. CalPERS, California State Public Employees Pension Plan, is the biggest pension plan in the country. It's $226 billion. Their assumed rate of return is 7 3/4, and their actuary is trying to get them to push it down to 7.5. If you're aiming at 8 3/4, you're going to have to maybe make investments that are a little bit more dicey to try and achieve that level of return, and that's questionable these days, especially in a fund that is supposed to be there for sure when people need it for tuition.
How concerned are you that the fund will run into trouble going forward? I mean, it's on the hook every year to pay increasing amounts to the beneficiaries of this plan, which I should say you are one of them.
Yeah, we do have a contract, and I'm concerned because of two reasons. One, the rate of return they assume is very high. They have a very aggressive portfolio management style in all these alternative investments. They're aiming at over 45% in alternative investments. That's not stocks and not bonds. The other thing that should give everyone concern is how underfunded the plan is now. And I think that is an indication of the rate of return has been below expectation and that the liabilities have not been managed. Universities in Illinois have run tuition up like crazy in the past 10 years. I think the Crain story said up 50% in 5 years. What are the universities doing with all this money? Maybe ISAC should negotiate like they did in Texas to get a little bit of break on a tuition rate just to get their liability down a little bit.
Well, in addition to negotiating some kind of deal with the college, what else can the plan do in order to ensure that it can meet its obligations going forward?
If they can't achieve the rate of return and if they can't reduce the liabilities by maybe negotiating lower tuition payments, is by asking or forcing plan participants like me to take some sort of a haircut on the benefit that has been promised to me. That is the economic answer. The political answer is there's 55,000 people in Illinois that have these plans, and that politically might be very hard to do.
All right, Brian, thanks so much for joining us today.
Thank you.
We appreciate it.
Thanks.
And that's this edition of Chicago Business Today. For more on this story, be sure to check out this week's print edition of Crain's and chicagobusiness.com. Thanks for watching. We'll see you tomorrow.